It's interesting how sometimes the biggest investment opportunities aren't the super flashy ones.
Mm-hmm.
Today, we're doing a deep dive into a corner of commercial real estate that, well, you might be overlooking. We're talking a $200 billion sector where some really savvy Chicago investors are quietly making some big moves.
That's right. Yeah, forget the shiny office towers for a minute. We're digging into industrial outdoor storage. IOS for short.
So,
Think of it as like the hidden foundation of the physical economy. It's basically industrial land that's mainly used for storage outside.
right, minimal buildings.
Exactly.
Yeah.
Usually the buildings cover less than, say, 20–25% of the land, often just a small office space.
Gotcha. And for this deep dive, we've got some solid grounding. There's an article, Exposed, the $200 billion real estate goldmine top Chicago investors are silently hoarding. That's from ChicagoDealFlow.com. Thanks to Michael Linton and his team there.
And we're also leaning on Michael Linton's own experience. I mean, 38 years as a commercial real estate broker and investor right here in Chicago. That's deep knowledge.
Definitely. So our mission today is really to understand why iOS is suddenly such a big deal, especially here in Chicago.
Yeah, what makes these, seemingly simple plots of land so attractive, and what do you really need to know about this market?
Okay, so industrial outdoor storage.
Yeah.
Sounds simple enough, but what's really involved besides, just open space? And what's fueling this massive $200 billion valuation?
Well, it really boils down to the land itself, and crucially, the improvements on that land.
Okay.
Like the article points out, the value isn't so much in big structures, but in things like heavy-duty pavement, good security fencing, easy access points. Collier's actually defines it pretty well: industrial sites with a big outdoor component for storage or maybe heavy industrial use or truck parking. The real key is location in those land features.
So it's less about fancy warehouses and more about the practical, essential yards that keep things moving.
Precisely. There's a Chicago firm, Industrial Outdoor Ventures, they put it nicely. Basically, almost every product or service you use, think about your toothpaste this morning, or roof shingles for a construction site.
Right.
They probably rely on these kinds of facilities somewhere along the line for delivery staging, infrastructure support, simple storage. It's kind of the unseen backbone.
Huh. Never really thought about it that way. So if I were looking at an iOS property, what are the typical features I'd see?
You'd typically expect controlled access, right? Often pretty serious security, high fences, strong pavement that can handle heavy loads.
Makes sense.
Usually a small office building, like we said, but mostly open, usable land. And really important, strategic location near highways or rail, and multiple gates or access points so trucks can get in and out easily.
And who's actually using these spaces? Who are the tenants?
It's quite a mix, actually. You've got logistics companies, trucking firms, those critical last-mile delivery operations.
Like Amazon's vans, that sort of thing.
Oh, exactly. Also, equipment rental places, think construction gear, construction suppliers themselves, basically anything that needs outdoor space. You'll see stored construction machinery, shipping containers, piles of landscaping materials, fleets of commercial vehicles, you name it.
Okay. Now that number, $200 billion market size, that definitely jumps out. What's driving that huge valuation?
Yeah, it's a big number. PwC data confirms it was over $200 billion in 2024. And what's really telling is the institutional money flowing in.
The big players?
Right. TPG, Angelo Gordon, JP Morgan, get this. They collectively raised over $3 billion in 2024 specifically for iOS investments.
Wow.
Yeah, that kind of capital, often through specific funds focused on logistics infrastructure, it tells you there's some serious belief in where this sector is headed.
So it's not just a few smart individuals seeing an opportunity. It's tied into bigger economic shifts.
Absolutely. Alan Pontius over at Marcus & Millichap, he really highlights the e-commerce effect. This once kind of overlooked niche, it's now front and center because online retail needs this kind of property in its supply chain.
Okay, so it's happening nationwide, but the Chicago deal flow piece really calls out Chicago as an iOS hotspot. What's special about Chicago?
It really comes down to Chicago's core strength. It's a massive transportation hub.
Can't argue with that.
You've got the convergence of major highways, the huge rail network, O'Hare for air freight. It's just a critical junction point for the whole country. And that directly fuels the need for these kinds of storage and staging areas.
And having someone like Michael Linton with his, decades of experience right here, that adds a lot of weight.
It really does. 38 plus years watching the Chicago market evolve. He's seen this iOS growth firsthand, and he points right to that extraordinary growth potential. Classic economics, really. Limited supply meets rising demand.
Right, which brings us to that perfect storm idea I mentioned in the article.
Hmm.
Can you break down the supply constraints and the demand drivers a bit more?
Sure. Let's start with supply. Why isn't there more of this stuff? Well, first, zoning. A lot of towns and cities aren't exactly eager to approve new outdoor storage yards, especially near residential areas or in high-value commercial zones.
Yeah, I can see that. NIVism, maybe?
Partly that, partly just planning priorities. Plus, there's redevelopment pressure. A lot of existing IO sites are in pretty good locations near transport links.
Prime land.
Exactly. So developers are eyeing that land for, warehouses, distribution centers, maybe even apartments or retail things perceived as higher and better use, or at least generating more tax revenue.
So the existing sites are shrinking.
They are. And building new ones is tough. Regulatory hurdles, community pushback sometimes, and you need specific locations, good highway access near those intermodal hubs. You can't just build them anywhere. The result? Marcus and Millichap says national vacancy is below 3%.
Wow, that's tight.
Super tight, which naturally means rents go up, property values go up.
Okay, supply is squeezed. What about the other side, the demand surge?
E-commerce is the big one. Just the sheer volume of stuff being bought online requires this vast network for last-mile delivery. iOS yards are often where delivery vans are parked, where packages are sorted for local routes.
Marcus?
Then there's supply chain restructuring. Companies want inventory closer to customers, making supply chains more resilient. That means more storage points.
Right, avoiding those disruptions we saw.
Exactly. Last mile logistics itself, the push for faster and faster delivery times needs these strategically located hubs near population centers. And don't forget infrastructure spending. All those road projects, bridge repairs, that needs places to store heavy equipment and materials.
And Michael Linton really flags e-commerce as the game changer here.
He does. He basically says e-commerce has totally transformed industrial real estate, and iOS is now mission critical for how modern supply chains actually work. Companies need these facilities now.
Let's talk money then. The economics. Why are the returns supposedly superior for investors in iOS?
Well, generally, you're looking at higher yields compared to, say, a standard warehouse. Cap rates, that's your return based on income, can often be 100 to 200 basis points higher.
So 1 to 2% higher return potential.
Right. A big reason is lower capital costs. You don't have massive, complex buildings to construct or maintain. It's mostly about the land, the paving, the fence. Less capex, as they say.
Lower upfront and ongoing costs.
Exactly. Plus, there are often opportunities to add value. Maybe improve the security, upgrade the surface, make the small office nicer, streamline operations. And looking long-term, a well-located site might have potential to be redeveloped into something else down the road.
And what about the day-to-day running costs?
That's another advantage. Infrastructure costs are minimal compared to a big warehouse with complex HVAC, lighting, plumbing. Property management tends to be simpler too.
Fewer things to break.
Pretty much. And you can often expand storage capacity pretty flexibly without huge capital outlays. You're essentially using almost all the land, maximizing the rentable area.
Okay, so if you're an investor in Chicago, and this sounds interesting, what are the ways in? What are the strategies?
The article highlights a few common ones. One is property aggregation, buying up several smaller iOS properties, maybe in the $5 to $15 million range, and bundling them into a portfolio that's attractive to bigger institutional buyers.
Creating scale.
Right. Another is value add, finding properties that are maybe a bit run down, underperforming, and then investing in upgrades, better security, new pavement, fixing up the office to boost rents and value.
Makes sense. Buy low, improve, increase income.
Yep. And then there's focusing on tenants. Finding properties where the current rents are below market rates or the leases are expiring soon. That gives you an immediate chance to increase the revenue.
And I assume location is still king here.
Absolutely critical. Michael Linton really hammers this point home. Being in the right spot within Chicago's key distribution corridors, that's paramount. Those locations get the best rents and stay full.
So when you're checking out a potential iOS deal, what are the crucial due diligence items? What do you really need to look at?
It requires some specific focus. Environmental assessment is huge, given the past or present industrial use. You absolutely have to understand the zoning rules and any use restrictions. What exactly can you do on that property?
Can't just assume anything.
Nope. You need to evaluate the infrastructure carefully. How's the pavement condition? What about drainage? Can it handle the weight of heavy trucks and equipment?
Right, the physical stuff.
Yeah. And analyzing market rents is key, but specifically for iOS, which can vary depending on the exact type of storage and the location. It's not the same as warehouse rents. And like we mentioned, thinking about the long-term potential, could this site eventually be used for something else? That's part of the calculation too.
Okay, let's circle back to the tenants. We mentioned broad categories, but are there specific types of companies that are big users of iOS?
Definitely. In logistics, you've got the big names XPO, FedEx, UPS, Amazon needing space for trucks, trailers, vans.
Okay.
Construction is huge, general contractors, but also those equipment rental giants, building material suppliers. Think scaffolding, lumber, pipes.
All that stuff needs to sit somewhere.
Exactly. Utility companies, gas, electric, telecom, they need yards for their service vehicles, poles, pipes, cable reels, even municipal services, think school bus depots, waste management truck yards.
Right. So what do these tenants absolutely need? What are their top priorities?
Security is usually number one. They've got valuable equipment or materials sitting out there.
Makes sense. Need to prevent theft.
Right. Accessibility is key, 24/7 access, easy ways for trucks to get in and out without bottlenecks. The surface quality needs to be durable enough for heavy stuff. Location, obviously close to their service routes or major highways. And some operational flexibility, maybe they need to reconfigure how they're storing things sometimes.
Got it.
And it's worth adding, Industrial Electro Ventures makes a good point that these tenants, the users of these industrial service facilities, often provide pretty good jobs, full-time work with benefits.
That's a good point. So comparing iOS directly to, say, a traditional warehouse, where does iOS really have the edge?
Well, the supply-demand fundamentals are often stronger right now. Like we said, lots of warehouses have been built, maybe leading to oversupply in some areas. But new iOS is much harder to create, so potentially better long-term rent growth.
Fewer competitors coming online.
Exactly.
Hmm.
There's also more operational flexibility. You can often adapt an iOS site to different tenant needs without massive renovation costs, unlike, say, converting a specialized warehouse.
Sure.
Operationally, costs tend to be lower management, utilities, insurance are usually less than for a big building. And for the investor, there are multiple ways to make money, hold it long-term for cash flow, sell it as part of a portfolio, redevelop it eventually, maybe even sell it directly to the tenant who's been using it.
Interesting. You wouldn't necessarily think of tech playing a big role in, storage yards.
That-
But is it?
It actually is increasingly. On the security side, you're seeing things like AI-powered cameras that can detect intrusions or monitor activity intelligently, automated gates using RFID tags or even mobile apps.
Oh, neat.
Yeah, sophisticated perimeter sensors, even GPS tracking on valuable assets stored on site. And for management, there are now digital platforms to handle leases and communication, tenant portals, maybe IoT sensors, monitoring conditions, even using drones for site inspections.
Okay, so it's not just asphalt and a fence anymore.
Not entirely, no. Technology is making operations more efficient and secure.
So for our listener in Chicago who's thinking, okay, this iOS thing sounds compelling, how do they actually get started? What's the advice?
Well, Michael Linton's advice is pretty clear. Work with professionals. Find brokers or consultants who really specialize in iOS. It's a niche.
Don't just call any commercial broker.
Probably not ideal, no.
Yeah.
You also need to educate yourself, study the market, see what kinds of tenants need what rents are realistic in different areas, really understand the zoning, identify those high-demand, low-supply pockets.
Do your homework.
Absolutely. Networking helps too, industry groups, events, and maybe you don't jump in with a massive acquisition right away. Consider starting smaller, maybe a joint venture with someone experienced, or even indirect investment through a fund that focuses on iOS. Value-add deals can also be a good entry point.
Makes sense. Start smart.
Yeah.
So looking ahead, what's the crystal ball say for iOS, especially around Chicago?
The outlook seems pretty strong, actually. E-commerce isn't slowing down. That focus on supply chain resilience is likely here to stay. Infrastructure investment keeps rolling. And crucially, institutional investors now see iOS as a legitimate, important asset class. That recognition brings more capital and stability.
And Linton really sees that institutional shift as fundamental.
He does. He calls it a fundamental change, basically saying sophisticated investors now get that iOS is an essential piece of any serious industrial real estate portfolio. It's not just an afterthought anymore.
Okay, so wrapping this up, the takeaway seems to be industrial outdoor storage, while maybe not glamorous, is a really significant and growing part of commercial real estate, especially here in Chicago.
Definitely. You've got this compelling mix of limited supply, strong demand from crucial industries like e-commerce and logistics, which leads to attractive returns and pretty efficient operations for owners.
And as Michael Linton puts it, it's that rare combination in Chicago right now, the potential for good, immediate cash flow and long-term appreciation.
Right. And for anyone wanting to dig even deeper, the suggestion is to check out chicagodealflow.com, or you could contact Michael R. Linton directly at eXp Realty.
All right, so let's leave you with this thought to chew on. Given how vital this sort of under-the-radar asset class is for logistics and just how our cities function, what other seemingly unglamorous sectors out there might be quietly powering the economy and hiding some serious potential, especially in major hubs like Chicago? Something to think about.